Hello everybody, welcome back to my channel, Trading Secrets. This channel is for entertainment purposes only. I'm bringing you this special edition video to look at what just happened, what are the reasons, what are my opinions, and is there any potential for the future. In terms of the key update that I'm going to start with, first of all, I'm sure most of you will now be aware that Trading 212 have now allowed Torch to be converted into MMAT. In terms of today's trading, I'm not sure that's a good thing now based on what's happened. So in today's video, I'd like to focus on what are the reasons, what happened, what's my opinion, and I'm going to first of all start with a question here that was presented to Trading 212 customer service, brought to my attention. So let's have a look at their response in terms of what happened. Okay, so this was initiated conversation today, brought to my attention, and I'll start at the bottom. And the key question asked here is: the merger was today. All short positions should have covered before in day of the merger. Why are they still allowed to short this stock when hedge funds should be covering? So let's have a look at the continued response from here. So Borislav's initial response here is: if an individual's account falls below the minimum required to hold a position, a margin call would be required. Indeed, however, is an individual on an account basis. So the response here from the investor here is: I understand that, but the rules and regulations state that all short positions must be covered when a merger is complete. Why isn't this happening? So let's have a look at the response. Next screen here. When short positions remain open, it doesn't mean that the respective accounts in which they are held do contain the needed funds to maintain them open. Otherwise, they get closed automatically. Response from investor: I don't understand what you are saying. They don't have to cover in the case of a merger, question mark. When that's the law, question mark. So short positions can be transferred from the old stock to the new one, question mark. So the investor has again presented some evidence here. You are forced to cover a position by a margin call prior to the merger going through. The exact time you're allotted depends on your broker, so contact them. A shorter must feel and predict the psychology of the markets. It's not enough to base his movement on logic or feelings. So that clearly did not happen in this case. Can you explain to me? So let's see what the response is after this. So I've highlighted the response in red here. This is the response from Trading 212. Before the merger was initiated, a margin call, if needed, was sent out on an account basis. If the positions were not covered, they were closed as usual. Any position that remains were covered prior to the margin call or did not have the need to be closed. Please inform me where you are getting your information, since I do not see that you have an equity and invest account only. So again, it looks like Trading 212 are trying to divert the attention of the questions here at the end. And at the bottom, Boris has continued to say: since all actions taken before and after the merger have been completed in according to our regulatory requirements. So let's see how this finished off. So this is the final part of the conversation. As far as our clients go, when the account margin requirements fall below the 50% of a margin, a call is sent out. When that level drops below 29%, the position gets automatically closed. For other brokerages and institutions, I cannot be certain of the way that a margin call is covered. However, it would follow the same principle. So response from the investor: thank you. Even though it's required by law for all short positions to be covered before a merger takes place, you are basically saying in this case, because they had the marching requirements, the shorters were not forced cover in this instance. So conclusion here is basically, from what I see here, in terms of the investor has presented some good questions. The investor is certainly not happy, wants to know why the shorts did not cover. But what I would like to say is shorts are very, very clever. They're very, very manipulative. They know how to play the system. They also, I believe, have inside information, and I think that may well have helped them. Let's now have a look at a response from Webull point of view. So this again is a conversation with Webull regarding what's just happened. So since the merger covers on Torch Monday this morning at midnight, when do short positions need to be closed? So response: before the 30th of June 2021 need to be covered lightly any other short position. Even with the merger being moved to 28th of June, need to cover today. So again, seems to be basically a response from Webull here saying they need to cover by the 30th of June. Again, more confusion to the situation, so that's the response from Webull. The next thing I'd like to look at is possible market manipulation, evidence of that. First of all, the first evidence I can see, if you look at the screen here, this is with regard to market volume. So in terms of letting you all know, this is a post shared on social media. Market volume at the moment is around 25 to 30 million, which is not even close to the usual volume for Torch, which was around 70 million. So what that basically means and suggests, nobody is selling. Hedge funds are manipulating the price for sure. So again, how many people sold? I certainly didn't sell. I'm fairly confident the vast majority of retail investors didn't sell. So what's going on in the market? If there's not much selling going on, the volume is very low, why is the price nosediving? We would certainly like to know. I also shared one other explanation in terms of what happened today. If you refer back to the page on my community post, there was another theory in terms of what happened today and why the share price nosedive. So please refer back to the community page. So I'm not going to repeat that explanation here. But what I am going to finish off on is a little bit of a positive note, and this is a tweet from George. George has said there's going to be a live webcast presentation next week, Tuesday the 6th, 1 p.m. to discuss recent events, Meta's future, growth initiatives, MMAT. Please join us here, register at the website. So possibly for anybody holding MMT long term, there could be some potential here in terms of a catalyst. Again, I'm not happy with the situation. All of us are not happy with the situation. I think there is something suspicious. I certainly think there's something that we've not been told. I'm quite angry that George seemed to mislead us in terms of suggesting strongly that shorts were under attack. It seems as though either something else was going on or the hedge funds and the short outwitted George. So something's very, very fishy from my point of view. And if anybody has any theories on this and suggestions, because nobody saw this coming, it seems as though in a boxing match this was a below the belt punch. Thank you very much for watching. I hope that makes sense. We're certainly not happy, and let's for now hold and see. That's my position, and monitor the situation as we go forward.